Hi, everybody, welcome to the webinar. Just give us a few minutes, let everybody get logged in, and then we'll get started by introducing our panelists. Appreciate everybody attending today and taking some time out of their busy day to learn a little more about flood. Just give it a couple more minutes, and then we'll get going. All right. Looks like the attendees are starting to slow down a little bit, so we'll go ahead and get started. My name is Brad Turner. I'm the National Product Group Leader of Burns & Wilcox, and just going to go over a few notes to teach you about how to use GoToWebinar in case you're not familiar. You do have the ability to submit questions on the webinar, so you can utilize the chat feature, and being able to enter the chat, we'll have somebody moderating and be able to get to your questions hopefully at the end. But if we have the ability to get them in context, we'll definitely try to do so. Going to take the time to introduce our panelists at this point. Again, my name is Brad Turner. I'm Vice President, National Product Manager of Flood, and the leader of the practice group for Burns & Wilcox. I'm joined by Jacob Martin, who's our underwriting manager of our flood practice group. To mention, our flood practice group was just named the 2023 Inside P&C Specialty Underwriting Team of the Year for demonstrating an ongoing commitment for client service, crafting coverage, helping with claims, and outstanding underwriting performance. Jake has certainly been an instrumental piece of our flood practice group and really driving our flood underwriting initiatives, helping clients across the country as well as our offices in writing and understanding flood business. He's also been very instrumental in implementing data analytics into our flood practice, which has been great in helping us make better decisions. That includes rating, giving information to our clients, and educating on the need for flood insurance. Jake is out of our Charlotte, North Carolina office, where he's in his 10th year of service with Burns & Wilcox. He's started as a commercial lines underwriter and had joined the flood practice in 2018, where he's done an excellent job in helping us kind of pivot our products and helping our clients. He does hold a master's in data science and business analytics and a BS in RMI and mathematics, so he is a very smart individual. We're going to pivot on to Justin Presley, who is also very smart in his own way. Justin is our Associate Managing Director of North Carolina, and he's also a personal lines insurance underwriter who's had 12 years of service. He's done quite a few different things with the company, including working in condos, also now leads a lot of our personal lines initiatives on the East Coast. He's really take a shining to really pivoting in the London space, very, very good and very specialized in coastal risk placement homeowners, including wind and flooding. And he's well known for his ability to manage relationships. He's also a graduate of our KILT program, which is our London leaders in London training, which really helps kind of navigate the London market, helps kind of promote our next wave of leaders in the London space. And he's also a repeat attendee of our producer forum annually, which recognizes the top performing underwriters and brokers with Burns & Wilcox. So welcome, Justin, to the panel. And Sylvia, last but not least, obviously you can tell by the hardware behind her, we were picking on her a little bit because we don't have as many behind us, but Sylvia is Associate Vice President, Director of Personal Insurance for Burns & Wilcox out of Woodland Hills, which is near LA. And Sylvia has over 25 years experience. I think it's closer to 30, but we're going to use 25. Sylvia is well known for her expertise in the California market, ability to effectively navigate, manage challenging market conditions, which certainly has been present in California over the recent memory. 2020, Sylvia was a recipient of Insurance Business America's Elite Women Award, which recognizes impressive performance and longevity in the industry, including driving innovation, fostering growth to shape the industry's future. And in 2023, Sylvia was also named our Burns & Wilcox Personal Lines Producer of the Year, adding another piece of hardware to her shelf back there, which recognizes top producers in the company for their underwriting and sales excellence. So welcome everybody to the panel. I'm certainly excited. I've had the ability to work with all of you through my career, and I take a lot of pride in being able to associate myself with you guys. You guys are a great panel, and definitely excited to hear your insight as it relates to kind of how you guys are navigating the market, and specifically with flood insurance. So Jake, we're going to start with you, and we're going to kind of take a look at the state of the market, right? So, a year ago, we really had a lot of challenges within the market. The market was reeling over a very active storm season, and actually very active storm seasons, kind of culminated into the couple years coming out of the pandemic. It's, obviously Hurricane Ian landing in Florida also changed a lot of the coastal capacity, the way we navigate property insurance within cat exposed areas. Now we've kind of had a year removed from that process. It was a lot of increases within the reinsurance space, which kind of did constrain a lot of capacity within the cat property area in particular. Can you kind of speak, Jake, now that we've gone through this cycle and we've gone through another reinsurance cycle this year and placed a lot of our London renewals, can you kind of speak to what you're noticing in the market, both localized from a flood perspective, but also how the market cycle is set to approach the 2024 season, and maybe some of the things we can expect as we move forward?
Yeah, that's correct. And thank you for having me, first of all. But for if you go back a year, the big conversation was all about reinsurance rates. So in 2023, after Hurricane Ian, what you saw is there was a massive increase in reinsurance rates. I believe the average that year was around 50%. So that was a huge educational piece. All of last year was just people talking about reinsurance and the whole industry. So fast forward to today in 2024, what you've seen is that a lot of our carriers have told us that either the reinsurance rates this year were either flat or some of them had a slight decrease, but it was very nominal. But you have to remember about that is that it's compared to last year. So last year, the reinsurance rates skyrocketed up to here, and they're still up there. So that piece is still going to be included in the pricing that you're going to see. It's just that you're probably not going to see as big of increases this year as you did last year. So as capacity as a whole is increasing in private flood, and it has been on that trajectory for the private market for quite some time. This year, when we did all of our when we did all of our slip renewals, all of our markets were very willing to give us additional capacity. I believe all of the ones that just renewed in April, they were more than ecstatic about opening up and giving us more aggregate. I don't know if that was necessarily the case for everybody in the marketplace, but that's kind of what we saw. And to also just shed a little bit of light, property carriers really see flood as a way to diversify their book. A lot of these books are going to be wind heavy, and so flood is a way for them to bring on additional premiums without necessarily increasing in the same way their reinsurance or their cat loads and all of those types of things. So because it's another line, it just allows their book to grow. And the other thing I'll say about the direction of flood as a whole is just with the data. The data with flood is increasing just in terms of quantity of data points, the accuracy of that data, the number of vendors out there that you can acquire this information from. It is so easy at this point in order to just gather data through public sources. There are private sources out there, and all of that leads to just more competitive pricing. If carriers are able to more accurately project their losses, they're going to be able to be more precise with the way they actually deploy their capacity.
That's all good points, Jake. Have you noticed, you're talking to data, and this is somewhere that you have a ton of expertise. Have you noticed how data has helped really navigate those coastal corridors where, obviously there's a lot of volatility in the property market? Have you noticed how data has oriented us or positioned us in a way to help us kind of navigate that space, both from a rating perspective, maybe coverage perspective, or maybe just acceptance in what we see and what we can, place overall?
As far as our book goes, we have certainly become more competitive over the years. If you go back 4 and 5 years, you can see that as we have actually gathered better data points, our pricing has come down, and we've been able to expand coverage, offer better pricing, and be more competitive in the marketplace. Traditionally, the big player out there is the NFIP, and quite frankly, like they dwarf anything in the private market in terms of their premium volume. But you are seeing is that the private market is chipping away at that, and they are bringing premium into the private market. We have the ability to offer better coverage and particularly in terms of replacement cost coverage, business income, or loss of use, in whatever form that takes, whether that's for an individual who owns a house or whether that's for a restaurant that needs business income. We have the ability to offer better coverage as a whole.
All right, all good points. Thank you, Jake. And JP, we're going to kind of pivot to you. You know, Jake kind of laid it out for us, and kind of, I know you have a lot of experience with kind of the market and going through this change. You know, you've been placing flood business now for the better part of 8 years. You've been very successful at it. You know, as one of our top flood producers in the company, can you kind of speak to some of your best practices in connecting value with agent partners, especially when you're cross-selling flood against, you know, other products like homeowners, wind, where obviously that's where people are approaching you for, maybe not necessarily thinking of this for flood. How do you bring the value of what we can do in the flood space to your clients and navigate that?
That's great. Can you hear me okay?
Can.
Wonderful. Yeah, thanks for having me also. Yeah, so more business over the past few years has entered the E&S sector than we've seen in a very long time. So, and to Jake's point, just to reiterate, the number of named storms, right, has been unprecedented, historical years of named storms. So the conversations have been quite easy because we're all living this out right now, you know, kind of month to month. Obviously, predominantly out of wind season is when we all kind of hold our breaths for a moment here. But you know, at Burns & Wilcox, there's been no shortage of great carrier relationships that we have. So whether that has been really any sort of line of business, when you look at the shakeup of what's has happened in the admitted space and even the high net worth space, it's really presented opportunities for us, whether those were, you know, cat reduction, you know, from other high net worth carriers. It's giving us an opportunity to quote multiple lines of business for our clients and for their insureds ultimately, that those carriers were packaging, whether that was hazard, then some inland marine, some liability coverage, and then ultimately bringing us to the flood coverage, you know, the aspect of this. We had carriers that were writing excess flood. Well, man, that is something that at Burns & Wilcox right now, at the moment, we have done amazing with. When you consider what's happening with inflation, cost of materials, all these things, and me specifically being in the coastal North Carolina space, down to South Carolina, all the way down to Florida, quite frankly, very affluent areas that there's been a big need to secure more coverage than what the NFIP has offered. So there's that piece of that. Really, I think there's added value with us as well in the principle of having your homeowners and your flood with the same broker or with the same carrier, right? There's value specifically at the time of loss. I think that's has been an attractive piece that the insureds have found, and ultimately brokers have found, you know, that to be quite beneficial to have one place to come. I think Jake mentioned this as well. Our carrier partners have preferred that as well, you know, also to see that the insureds carry flood insurance so that it's there. It helps with modeling and other factors. So something additionally, our team of underwriters are proactive on our department level because we're able to offer multiple solutions that they may face. So just point in case, Brad, if I'm entertaining a submission for a home, whether that's in Outer Banks, whether that may be Charleston, South Carolina, they say, hey, we have a $2 or $3 million home. We're proactively offering them a primary flood quote. Okay, it may be that they're in a space that wasn't required. Maybe they're paying cash for this home, right? That's reasonable. We're already offering them a primary flood quote, right? It just has an added value of, hey, here's your wind, your home, but also here's a primary flood policy. Additionally, we'll offer even excess flood policy as well, right? Some of these, when you consider the insured to value ratio and how much exposure they have even on this first floor, whether this home is on an elevated crawl space, whether it's on pilings, that first layer, that first 250 can quickly be exhausted. So there's some value there that we're really preemptive to offer those solutions. And then we're also looking at our existing book of business, right? So our clients that have business with us, you know, we're also looking at our renewals, you know, 120 days out, and we're considering there's remapping taking place, right? There's changes that are happening, there's erosion that's going on, right? there may be some necessary conversations that our team is going to have with you up front. Hey, we're remarketing your renewal for said reasons. Has replacement costs on this property changed, right? There's conversations to be had that we're going to go ahead and also be looking at means to offer them the value that we have with our flood team. So we're just being very intentional. We're looking at price per square foot. We're looking at inflation and some of those other factors that I just mentioned regarding erosion. Given that we write a lot of coastal business, we like to be an expert to add these services. And I'm obviously a little biased. I think our flood team in-house, led by Jake and others, are just really the value that they bring as well does differentiate us from other wholesalers in the market right now because of the data and the technology that they're using to help us with conversations as well.
That's awesome, JP. I know your team does an excellent job being proactive. I mean, you guys really get down into the weeds, make sure that your clients, protected, as in turn that their clients protected. So I think you really do a nice job of connecting all those needs and selling a total solution. I'm sure it's probably helped your retention and strengthen those relationships as well. Sylvia,
absolutely.
Yep, yeah, absolutely. Pivoting to you, Sylvia. JP kind of outlined some of the strategies he uses on the East Coast, and let's kind of pivot to your territory in the West, where California has been a lot to navigate of recent memory. You've obviously transitioned out of a pandemic to a very hardened market. Amongst the conditions that you saw, obviously inflation's played a big part, where property values are already highly escalated. Capacity constraints now become a big issue in the state, with a lot of people or a lot of carriers pulling out. You've also had a run of wildfire, combined now with the last 2 years of a state that does not flood, has flooded twice across the entire state with atmospheric rivers, resulting, in major historical rainfall isolated. So I think it's, there's so much has changed in the last few years with the market. How have you navigated all of this? And, in turn, you've done a great job of really selling and positioning flood as a way to strengthen, reinforce relationship. How do you do that? How do you position flood and all these auxiliary lines of business to help your relationships and your clients, kind of like JP talked about, amongst all the challenges that exist in the market? How are you doing that in California at such a high rate?
Well, I think the first thing is also to, as a salesperson, is selling what I have available, and flood has remained available for us here in California. While, homeowner markets are exiting, we had a small period of time where we hardly had markets in California. That's now turned around. But, it's, I always like to guide my clients that they really need to have a conversation with the insured whenever possible, because they need to explain that a homeowner policy may not provide the coverage for flood or mud flow, because these are typically excluded. I know with some of the high net worth carriers, it was easy to endorse that coverage. They're moving to the E&S market, and the homeowner policies probably are not including this coverage. So, knowing that my clients have access to us at Burns & Wilcox and we can offer flood, I think it's important that they offer this coverage alongside their homeowner policy wherever they may get it, to protect their exposure. And also it's a good way for my clients to keep that line of communication and connection with the insureds by writing the flood policy, even if they may not be able to write the homeowner policy, this year because of wildfire or pricing or whatever the case might be, because then you still have that connection with the insured, and you can revisit the homeowner at renewal, or if things change, we let you know we have a new market. And so you don't lose that connection with the insured, and you can continue building that relationship with them.
Yeah, I think you bring up a really good point. I know, we already talked about JP does the same kind of thing. You sell what you have, but you also, you keep that contact, and that really goes in our space as well as down to the agent broker level, where keeping in that contact, the market's going to constantly change. It's going to constantly evolve, and there's always going to be an absence of products, maybe not to the extreme that we've seen in the last few years, but there's always going to be that kind of ebb and flow of products. So I think keeping that contact, maintaining relationship, reinforcing as a kind of a stop all that you do have the ability to kind of help navigate the market as it evolves and changes. It's all important points. I think you guys do you and Justin definitely do a great job in your own territories, really predicated on that point, maintaining relationship and strengthening over time, not based on, you have plenty of things to sell, but you're always constantly evolving and adapting to the market. So I commend you for that. Kind of moving back to Jake, and you heard Sylvia and Justin talk about connecting the value of our flood practice with strategic opportunities within their own books. Private flood has obviously developed rapidly over the past several years. Many more options are available to the consumer than ever before, and we've seen this really in the last 5 in particular, where we've kind of seen a boom of products in the market. Now that we have all these differences and options, can you kind of speak to some of the different factors that exist among the growing number of private flood markets, and kind of how we at Burns & Wilcox align in our space to deliver a unique advantage to our clients?
Sure. So if you kind of want to look at the way that the different models work, if you have on the one side, there's that very traditional type of approach that's very similar to like an NFIP style approach, where it's usually very elevation certificate heavy. They're going to have slot rated type structuring. Oftentimes it can be less than the NFIP because they're simply doing a discount off of that. It's usually rates that are determined based on the elevation certificate, how the building's built, and then really just where it's at. It's a very simplistic model for rating structure. And then if you go to the other side, there is a completely API driven approach. So this is going to be where you go onto a website. It's going to give you a quote within seconds. And there's very little transparency around how they actually develop their flood rates, the underwriting and those types of things. It's all going to be kind of closed behind that API style. So the flaws with those is that on the traditional side is what you end up seeing is that the pricing can often not be adequate, and there's often a market exodus whenever one of these big cat events happens. So you'll see either massive pricing increase, or you'll have non-renewals go out and things of that nature. On the other side, you can also have a very poor renewal experience because there's just flaws in technology, and we all understand this, is that technology is not perfect. Oftentimes that there's loopholes and things you can jump through in order to get a really good rate the first year, but maybe the second year and the third year there's either massive pricing increases or non-renewals that go out. And Burns & Wilcox is really set up, and our flood practice is really set up to sit kind of in the middle of that. We're trying to be more of a hybrid between the two. So what that means is that we have a lot of expertise in the forms of people, and when we review every single risk that comes in our doors. So we're using the technology that's available to us. We're relying on modeling, PML levels, and just different returns that come in through the flooding. We're using the data in order to actually make decisions. But what comes with that is we have the ability to be very stable. We have the ability to offer you information and consultation on what a risk looks like. If you're asking, what are the returns for flooding on a 100-year basis at this property? Like, what is the actual exposure? We can have a conversation with you about that and where the pricing that we offer you comes from. We try very hard, and we talk about in our flood meetings, we are trying to be a buttress of stability in the marketplace. So that includes like offering very few non-renewals where possible, and keeping a consistency of our rating structure. So.
Perfect. Yeah, I think you kind of speak to the space we sit in. It is very unique. It's, and for our relationships, not only do we have, our underwriting book that we obviously we pride ourselves in being very profitable, stable over time, but we also can zoom out and see the full market. And so we have a heightened awareness of market activity, where things are going. It could be geographically, it could be market segments. So there's a lot of different pieces that we can kind of piece together where we sit at a high level. And obviously we can dive into the weeds and leverage the data piece of that to make good decisions that are sustainable long term. And that's really what we're about within the practice. Justin, let's pivot over to you. And obviously as a producer, just as an agent, anybody trying to communicate about flood insurance, one of the biggest challenges with flood risk in the U.S. is it's kind of converting the awareness of exposure versus what the uptake actually is. It continues current day to be the number one. It's the largest underinsured and uninsured peril that property owners, for any property owner that exists in the U.S., you're actually 30 times more likely to have a flood event than a fire under a 30-year mortgage, which is, most people hear that and they're like, that doesn't even sound right. But the reality is we just have a lack of awareness of exposure. A lot of it's predicated on lender participation. Lenders basically forcing the need for insurance as a requirement if you're in a special flood zone A or V. Anything outside of that, you're safe. You're not in a flood zone, is what we hear, right? So kind of looking at this point, what strategies do you know to be successful with your partners and that you've seen, in execution and connecting the need for flood insurance with their clients? And it essentially comes down, why do people need flood insurance?
Yeah, I think about conversations I have when I really got in the industry, and one of the simple lines that has really resonated with me to this day is that why you need insurance is because things happen every day that aren't supposed to happen, right? Brett, you bring up some great points. What we've seen recently in some statistics with NFIP is that over 20% of their claims are coming from outside of the high-risk flood zones, right? So those low to moderate areas undoubtedly have to be talking about and having conversations surrounding, as Sylvia mentioned, that their homeowner's policy is not going to cover this peril. And quite frankly, these preferred flood zones, these low risk areas, I want to say this lightly, typically are relatively inexpensive. I say it right, we're all consumers. We see where this market has graduated to, and we're all price conscious, conscious at this point. So I say that lightly, but really, also living in a coastal area, I've lived this out personally. When we look at the hurricanes that have pulled through over the past few years, Hurricane Florence hit us in 2018, and goodness, it was a Category 4 that was downgraded to a Category 1 within 48 hours. But what was interesting is that this storm stalled out for over 2 days and dumped historic rainfall that we had not seen in over 60, 70 years in our area. So, I mean, myself, not required by my lender to purchase a policy. There's a creek behind my house, guys, that literally rose to the slab of my house. And that's where again, to Jake's point, with all the tools and the data that we have, storm surge, right? Like these levels of where creeks, bays, the sound, where all these bodies of salt water could potentially get, right? Based off these storms pushing in, the high wind pushing in water. I don't know what the number is at this point that our county specifically endured, but I have friends that I had to gut their home, right, up to 2-3 foot of drywall, whatever that code was. Massive subdivisions that were underwater. Water was up to the roofs of these homes. No flood insurance, right? It was heartbreaking. There's, not to mention then all that ensues after the fact, the headache and the hard conversations that they expressed when it came to applying for disaster relief, right? All these hard conversations that ensue. Not to mention just having to leave your home, right, and deal with those things. So the peace of mind for premium of having this coverage, this flood insurance, is, man, it's very easy to talk about, in my opinion. There was a stat I had here, guys, that I wanted to share. Was this is from 2020, so a few years ago, but the Federal Reserve economic data mentions that the median U.S. home price was around $350,000, right? So that's still 100,000 short of the maximum coverage available with the NFIP. And that's kind of what I was saying, for relatively a small nominal amount, and just another 100,000 that you could obtain from an MGA, from a partner such as us, you're right, to get that extra 100,000 for full flood coverage. I mean, I can't, again, none of my friends, even myself, could have ever imagined that we would see water. Brad, you lived in that area in Newport, right, where there was water up to the roof of homes. And again, that's not oceanfront property, right? And that's the difference. This property is 5 to 10 miles back from the ocean. But there was some rivers, there was body of waters that kind of allowed this to take place. So yeah, it's kind of where I landed on that is that it's been very easy. I think private companies give you more coverage, especially if you are in a lower flood risk area. You need to maximize your coverage that private companies can offer you. And talk to underwriters, talk to brokers that say, hey guys, explain what this 1 in 100 return means, right? Explain what the storm surge levels are going to be at this property between a Category 1 hurricane and a Category 3 hurricane. They're conversations that we have to keep having, when we're looking at these homeowner submissions.
Perfect.
If I
You
may.
mentioned. Oh, go ahead, Sylvia.
Yeah,
go.
I mean, and I think you made a good point. Is JP, is when your friends had to leave their home, and loss of use is a peril or a coverage we can offer on our policies, and that gets overlooked. I mean, sometimes how long it takes to rebuild. I had a friend in Texas that her house flooded from a pipe break, freezing pipe, and she's been out of her house almost 2 years, and so having the loss of use, and now her loss of use is about to expire because a lot of companies have 2 years, but that's a big coverage that I think that we can offer on our policies that you may not be getting somewhere else.
Perfect.
Absolutely.
Yeah. I think just to build on what Justin said too, the stat about 20% happening in non-mandatory purchase X zone type areas, that has actually doubled recently. So last 10 years, it's 40%. You got to remember too, the process that it takes 5 to 7 years to reanalyze a community and rezone, remap. So think about how much has changed. We already talked about it since 2020. Think about development. Think about market changes. Think about property, changes that we've seen in the market. All these things culminating. Flood maps, in those areas, a lot of times can be 15, 20 years old. So we're basing insurance on a kind of an antiquated way to look at the current day view of risk and exposure. So heavy rainfall is driving these big losses now. More so, surge is very, I won't say easy to predict, but it's much easier, a lot more wind data out there than there is for rainfall. The rainfall that we've seen, Florence was a perfect example in the Carolinas, Ian in Orlando, another perfect example of complete X zone community, got inundated with historical rainfall. I think it was a month's worth of rainfall in a day, 12 hours. So Harvey, same thing. So all these recent events, we're seeing historic rainfall driving the losses that we see. And that's why these X zone, they're not only are they not insured, they're big losses because they're heavy rainfall. The indirect loss is even more so because they are displaced for extended period of time. And then, you kind of touched on it, but disaster relief it's kind of understated. It's really not meant to replace insurance. At best case scenario, you're getting a low interest loan for, a 30-year period to kind of cover it. And that doesn't, that goes on top of what you've got to do to, get yourself back into a living situation, which means you could be paying for that loan in addition to on top of another mortgage. So there's so many situations where that insurance for a nominal premium really does protect you over the long run. So great points. Sylvia, I'm going to kind of pivot to you. And, we talked about raising the awareness for flood coverage, especially when it comes to, kind of connecting the exposure with the coverage. I did have the chance to visit California recently, and it was apparent to me, based on my recent experiences versus the past, there's definitely a heightened market awareness over the past couple years. I think even more particular with flood, I think the number of perils that you guys have had to experience in the state, the market exodus, and what you had to navigate as an insurance professional, what can you kind of provide or what do you speak to why agents and brokers in California should include flood as a focal point in their offerings, and kind of any tips to raise awareness out in your space on the West Coast where maybe there's some stuff that flood covers that maybe, people out West don't maybe anticipate, or maybe some things that you've noticed in your day-to-day that really help your agents sell more flood or connect the need for it?
Yeah, well, I mean, as everyone's aware, California has seen unprecedented rainfalls the last 2 years that have caused major flooding. You know, we don't know what to do with this rain. We're just, you know, out here trying to survive. And while I do understand that, you know, our clients, our retail partners are scrambling to find fire coverage in this very hard market, there is a connection between wildfire and flood. More than 2 years ago, you know, the Santa Barbara fire, the Thomas fire in Santa Barbara, you know, that caused major flooding once the rains happened after the wildfire, you know, and if insureds would have had flood coverage, you know, maybe some of those losses for mud flow would have been covered under that flood policy. You know, thereby not submitting a claim on the homeowner policy and maybe saving a non-renewal. You know, so these are the conversations that our retail partners need to have with their insureds. And, you know, like you've said, a lot of the flood losses do occur in low flood zones, low risk areas. Another great example is Sacramento. It's a very low flood risk zone because the city is protected by thousands of miles of levees. And while these levees are great and they're kept up, if they were to fail, Sacramento is going to be flooded. And so I think the push needs to be to, you know, in these areas where you think you might not flood, you might flood. And, you know, with the constant rainfall, like you discussed earlier, just constant raining. I'm in the middle of the San Fernando Valley, not real big worry about wildfires or flooding, but with the constant rain, my pool started overflowing, water started creeping. We started getting a little nervous, you know? And so I think that those conversations, and because it is fresh in people's minds, we need to have those conversations. We need to try to keep selling more flood and, you know, letting, you know, just keep reminding the insureds.
Perfect. So guys, we have about 10 minutes left, so we're going to go on our last round. So try to keep time in mind. So Justin, I'm going to pivot back to you. Obviously, we've kind of touched on your experience with the London market and kind of what you've had to do to evaluate portfolios, reposition property portfolios within your role in personal insurance. You know, and obviously the market's changed so much in the last 5 years. Can you kind of speak to some of the things brokers should consider in navigating their placement of flood risk? You know, kind of especially surrounding, you know, market selection between the NFIP and the private markets that exist, and how you believe sustainability plays a factor in that decision making.
Yeah, that's a great point, Brad. Goodness, yeah, Lloyd's is a significant partner for us at Burns & Wilcox. I actually was with Syndicate Underwriters just yesterday. They were in our office, so Lloyd's is one of the most iconic, you know, financial institutions, right? And I think even they've been included in some of these hardships and difficulties because of interest rates and natural disasters, right? All these things have happened, but ultimately, in order to protect their profitability and their future, they're focusing on how to be innovative with solutions that address customers' needs, right? While maintaining the adequate capital to cover these losses. So I think with their legacy, their long-term reputation in the market, I think that Lloyd's is well positioned to overcome any future challenges and continue to be a big integral part of the global financial market for years to come. Solvency of the market in which you're writing business is of the utmost importance. I don't know what the number was last year. I think there was 5, maybe 4 or 5, maybe 6. I mean, we saw in Florida Demitex that are gone, right? I mean, yeah, it's a very, very important conversation. And so I've always tried to live on the line also. Again, if they come on price alone, they will leave you on price alone, right? I think there's no hiding the amount of money that the NFIP has borrowed in recent years, in addition to the substantial rate increases, the remapping that's happening. We've seen homes that were in high risk VE, you know, flood zones be remapped to preferred zones, and we've even experienced some of these, you know, policyholders deciding to non-renew coverage now. But the risk didn't change, right? The exposure is still the same. And I think there could be a fear of, will you be able to retain that same policy? Could you get it back at the same premium if things changed? So Jake hit on this earlier. I think there's a lot of credibility with our relationship with our carrier partners, and we may not be the cheapest option. And other carrier partners that we align ourselves with also may not be the cheapest, but man, we're evaluating coverages. We're offering steady options in a marketplace where we kind of became numb to non-renewals and other lines of business. That's not the case for flood insurance. It's been so consistent, so steady within our practice. And that's not the case. We are continually fielding non-renewals from other write your own markets and carriers, right? So you guys have talked about this along the way. Apart from solvency, also the coverage options, right? We have coverage options that are just superior, in my opinion, apart from other markets. I mean, it's specifically the NFIP when it comes to detached structures, personal property and basements. Sylvia, you mentioned pool, right? Pool repair. These are coverages that you can find in other private markets as well, but we're matching those, right? There's nothing that we're lacking necessarily, right, from a competitive play. So, I mean, lastly, I would say continue to partner with brokers and wholesalers such as ourselves that really understand geography, understand the construction types, the rates, and yeah, really the profitability that our carrier partners want to see, and what they're entrusting in us is that we will be here. We will answer these, these phone calls and ultimately to pay these claims. That's what they're in the business of doing. So yeah, that's my hot take on that.
That's perfect, man. Thanks for the insight on it. And Sylvia, we'll switch to you. We got about 4 minutes left, so I'm gonna do a hot take on this one. So
I'm sorry.
No, it's all right, Justin. So, based on your experience, what are some of the advantages from an agent's perspective to utilize a wholesale flood relationship, maybe in lieu of going to a direct NFIP, write your own, or even going direct to a private flood carrier, where maybe you go through a portal or you have direct access to a relationship?
I mean, really what I could say is ditto what Justin said. I mean, I'm going to sound like a broken record, but what I think is key is that flood has been the most stable line of business I've been writing in California for the last few years. It's been stable, and that has to do with our amazing flood team, Brad, Jake, everyone on the team. They go into securing markets for the long run. We're not going to offer a low premium this year just to win the business and then jack up your premium next year. Our rates remain steady, our markets remain steady. We have a high renewal retention because of that fact. And that goes across all of our lines of business. We're not that kind of company that we're just going to, cut the price, win the business, and then next year, jack it up. So I think that, our flood team is great. We're able to look at all of the entire flood marketplace to be able to quote each new and renewal risk appropriately. If we need to remarket, we're going to be doing that for you, just to try to make sure that we're giving you the best option for your insured. So, I'm going to sound corny, but let us navigate your muddy waters and trust us with your personal lines business, including your flood. We're here for you.
That's a hot take. All right. So Jake, we're gonna close it with you. We got a couple minutes left. We kind of talked about some of the challenges that exist in the marketplace, and how private flood has come in and really helped us tackle a lot of the exposures that exist, and it's evolving exposure at this point too, with increased exposure along the coast, as well as navigating constrained capacity, all the things that obviously exist in the hardened market. Can you speak to some of the alternative risk transfer options that you and I have personally taken a lot of interest in the private space, and what are the advantages of these options, and how do brokers leverage that to their clients to help them understand how this will benefit and help protect them for any risk in the future?
I'll certainly try to keep it brief on this one, but I know you and we can definitely nerd out on this topic for quite some time. The biggest one I guess I'll throw out there just in a couple minutes here is parametric flood. This is a super interesting product. The market we work with specifically is sensor based, and so what that means is they're going to come out to the property, install a physical sensor on the side of a building or some type of permanent structure, and it's literally just a PVC pipe with some equipment in it. It's a very interesting piece of technology, but it can measure the depth of water at a specific location relative to the ground. So why this is interesting is it can cover just tons of different types of non-traditional types of risks. So think, let's put a sensor in the parking lot of a car dealership or a rental car company. And that way, if the parking lot floods, we can cover that for flood, whereas a traditional market just couldn't offer on that. Or they can cover bridges or anything of that nature, where it's just a permanent structure. It's an interesting object that needs coverage but doesn't fit a traditional market. The other one I'll say is areas that are hard to place. They're willing to put limits out there. They can make the coverage work. And the other thing I'll say is just in terms of traditional coverage, it can wrap around the NFIP or another private market that's offering similar coverage. So an example of that would be maybe a restaurant. They can get a rapid payout through this parametric option. It sits side by side. So as they're waiting for the payout on the NFIP policy, they'll already have that parametric payment in their bank account under like a covered claim. So say the water rises to 16 inches or so, they have a payout agreed amount upon that. And that's how that can work. There can be multiple sensors, that type of thing. So it's a very interesting coverage, and for commercial exposures, I think it's a great option for wrapping.
Yeah, I mean, I think another thing to mention, there's no adjustment. So it is a direct payout. It's a rapid payout, and it's direct to the insured. So, and you mentioned some of the non-traditional. Another one I'll mention is golf courses. We have a dedicated golf course program. Also land agriculture. We talked about this in California quite a bit, where agricultural risk, where you traditionally can't insure land exposure, crop exposure, that sort of thing. Parametric is a way to react to that as a trigger. So it's creating a trigger for something that traditionally wouldn't have the ability to even cover. And we know indirect loss, Sylvia already mentioned it, is a big loss circumstance and a loss claim. But then you also look, extending that to providing limits in areas like New Orleans, for example, where it's really, you can't get coverage, or for opportunities like open car lots, golf courses, land, where you're not able to really place insurance. It really does help give us another option, another tool in the toolkit to really place that insurance. So, if you're interested, obviously we can talk more. We're about out of time, and we really do appreciate the audience staying and listening to everybody talk. Thank you, Justin, Jake, Sylvia, for your attendance and your expertise. We definitely appreciate our partners and look forward to interacting and helping you learn more about how we can help you navigate the flood space and everything there is to offer through our practice group. So thank you from Burns & Wilcox. Hope everybody and our partners out there have a great day. Be safe, stay well.
Thanks, guys.
Thank you.